What's good, everybody? Spektrades back here. In this video, we're going over how I instantly became profitable with this trading strategy. Foremost, my name is Wendell, but I go by the alias Spektrades. I am a full-time day trader and have been in the financial markets for half a decade. I specialize in ICT smart money concepts. My goal is to simplify smart money concepts and help you shorten your path to success. If you want to stay up to date with me, make sure to check out my Instagram at Spektrades. I have been a mentor to over 1,000+ students, and if you want to join me for daily trading plus private lessons, you can just click the link in my bio. Find all the links. Before we hop on the charts, we have to go over our schematic, our setup and model, and our trading plan. So first, to start off with our schematic, we'll just be looking for our simple schematic, our liquidity sweep, and our breakup structure inside of our higher time frame key level. It's going to be looking the same way for a sell format and a buy format. So we'll look for price to do a liquidity sweep, right? Give us a liquidity sweep inside of a higher time frame key level, right? A higher time frame zone, a type of order block, fair value gap, or a previous day high or previous day low, right? So that's all we're looking for. It's for a liquidity sweep inside of that zone, a higher time frame zone, and then for price to give us a breakup structure on the lower time frames. So that is our simple schematic. So price is just going to give us a liquidity sweep, a breakup structure, and then come back and retest that same zone to continue the trend. So this is what we're just going to be looking for. But right here for the setup and model, this is where we're just going to be aligning it with time and price. So right here, as you guys can see, the times that we execute this model, right, the first thing we have to look for is on our trading plan, right? Let's just uncover it, is the time, right? The first thing is time first, right? This model right here, it will only work during a certain time, right? It's not that it's not that it won't work during different time, but volatility, right? Volatility really kicks in around this time. This is where price truly moves, I would say, right? This is during the New York session kill zone. There's a session I trade, right? There is also a London session kill zone, but I already had a video on that already. But this is the New York session kill zone, right? From 8 a.m. to 12 p.m. Eastern Standard Time, right? This is the exact time we will be executing this model. So as you guys can see right here, during 8 a.m., right, we'll be looking for price now to either purge an old high or an old low, right? During both setup, as you guys can see here, this is our setup and model. So we'll be looking for price to give us a liquidity sweep of an old high or an old low inside of a higher time frame key level, right? And then on the lower time frames, we look for price to give us a market structure shift, or we may label it a breakup structure, right, of the low that did the liquidity sweep. And this is where price will now start aligning our setup and model for us, right, during our session kill zone time. So it's from 8 a.m. to 12 p.m., right? This is when we can be on the charts now actively looking for different type of setups, possibly reversals to buys, I would say, right? Possibly a sell reversal to buy right here, right? And then buy to go and clear these old highs. A lot of lower time frame models will be shown. So if you understand that price is in a sell model, as you guys can see here, we know that price is going to respect all the bearish PDOs. So you're just going to be aligning yourself even better, right, to just correct yourself moving down with trend, right? That's why the first thing they always say is to trade with the trend. So if you know the trend is to go down, you're just going to be respecting all the bearish PD arrays, and price is just going to be pushing down. And if you know that the trend now is pushing up, price give us a liquidity sweep inside of a higher time frame key level and then give us a breakup structure, we know that price wants to push up. So we know that all the bullish PD arrays is going to get respected. So we're just going to be aligning ourselves with the trend to go on higher. So this is where the setup and model is going to be taking place from 8 a.m. to 12 p.m. Eastern Standard Time. That's the New York kill zone time. So make sure you align that with the proper time that you trade. And then for the bias, right, exactly what is the bias behind all this, right? The bias is that we have to do a higher time frames to lower time frames top down analysis. That's what TDA stand for, a higher time frame to lower time frames top down analysis, right? So once we go from the daily or the 4 hour as our higher time frames, and then we go to the 15 minutes, we now understand exactly what the higher time frames is showing us. So once we scale down to the lower time frames, we know exactly how to move, right, if prices may be in a reversal or in a continuation type of pattern. So we will always be able to see the overall bigger picture on the lower time frames, but we need the higher time frames to lead us, I would say, right, to show us exactly where price may pull to or where price may draw to, I would say, right, as our like draw on liquidity. That may be a previous day old high or a previous day old low, right? And once we know that those higher time frame key levels, those zones, right, we now position ourselves now to execute better, right, on the lower time frames, right? Just like I put it right here, the higher time frames equals the stronger zones, in the lower time frames equals the executing zones, right? So we need the higher time frame zones for us to pull to, and then we execute on the lower time frame zones. And then for the next thing is the time frames, right? The main time frames we'll be using is our higher time frame zones, the daily to the 1 hour. So those are our higher time frame zones. And then our lower time frame execution zones is from 5 minutes to the 1 minute, and then you can go all the way down to the 15 seconds, right? You don't have to go all the way down to the 15 seconds, right? The 1 minute is enough, right? But the 5 minutes to the 1 minute is like the lower time frame execution zones, right? So, and then from like the 1 daily to, I'll say, the 15 minutes, right? I'll say the 15 minutes also, right, could be a higher time frame zone if you are like a super lower time frame scalper, right? But our main lower time frame execution is from 5 minutes to the 1 minute, right? So this is it right here for our time frame. And then right here we have some rules, right, we have to go over, right, before we hop on the charts. The rules we have to go over is that no liquidity sweep in break of structure inside of a higher time frame point of interest equals no trade, right? So if we don't have a liquidity sweep in a break of structure inside of a higher time frame key level, say that price came close, right? This is our higher time frame key level. Price came close to it and gave us our pattern right here. Still, this is no trade, right? This is like invalid. Price has to tap inside of a higher time frame key level for this pattern to work, right? This is just through back testing and just through live data, I would say, right? This right here is just a good rule to follow. If there's no liquidity sweep in break of structure inside of the higher time frame key level, no trade. Always make sure, right, that you're taking the trade inside of the New York kill zone time from 8 a.m. to 12 p.m., right? So and then right here is no fear of FOMO. After second break of structure, price will give a pullback to our point of interest. So just like I stated right here, there's no reason to have fear of FOMO, right? There's no reason to be scared, right? After price give us our second break of structure, price will always give us a pullback, right? And give us an entry for us to enter in. This entry right here is just the first entry. This is our second entry. There's more entries that price always give us before reaching our final target. So there's no reason to have fear or FOMO, right? So make sure you guys watch the fear or FOMO video to understand more about that also. And then I stated to follow the structured trading plan. Just follow this structured trading plan right here. It's simple. It's easy to follow. Just follow the schematic, follow the setup and model, follow the trading time, follow the bias, and follow the time frame. It's easy to execute and it's straightforward, right? Just follow the structured trading plan and journal all trades, right? Journal all trades that you take and journal all the trades that you see, because that's where most of the growing will be happening, right? It's through the journal. And then we have right here is to backtest the session / model with your favorite pair. Always backtest this setup right here, backtest this trading plan, backtest it with your favorite pair, right? So your favorite pair may be gold. Go on gold and try this for yourself from 8 a.m. to 12 p.m. and see this, if this works out, right? So backtest this and see the results for yourself. So without further ado, let's hop on the charts and see exactly our model on the charts. And now we're on NZD/USD on the 15 minutes time frames. The 15 minutes time frames is my higher time frames since I am a scalper and I trade the lower time frames. So as you guys can see here, we have our higher time frame key level, this 15-minute order block right here, took liquidity from this old low and give us a break of structure. And we have Asian range liquidity, right? This gray box right here hiding right above our 15-minute order block. And we have inducement. So what am I looking for, right? Inside of my higher time frame key level, right around 8 a.m., right? I'm looking for price to give me a liquidity sweep, right, of this old low in a break of structure, right, on the lower time frames inside of my higher time frame key level, right? So now let's get down to the 5 minutes to see exactly how do you execute this. And now as you can see on the 5 minute time frames, we see that price left us this fair value gap aligned with this broken supply right here. This is just one of our super alignments right here. So a fair value gap, we're just gonna put this FVG right here, clean, aligned with this broken supply. Our stop loss right at this old low, and we're retargeting our main old high right here, clean, right? This is just our draw on liquidity. Perfect, right? So we're looking for price to tap inside of a higher time frame key level and give us a liquidity sweep, right, and a break of structure. And then during our session time from 8 a.m. to 12 p.m., just like you see here, this is happening during our session time. And if you miss this entry, right, after a second break of structure, all right, price pulls back inside this second right, fair value gap aligned with this broken old high right here. So we just place your stop loss right at this old low. So this could be your second entry. So just like I stated, there's no fear of FOMO. After every break of structure, price is going to give you another entry. So just like we see right here, this is our second entry, clean, right? So now let's look at another chart. And now, as you guys can see, we're on gold on the 15 minutes time frames. So the first thing we have to do is just develop our higher time frame bias. So as you guys can see here, before we develop this sell right here inside and buy right here, we first had this sell right here, right, that led to this buy right here. So now let's zoom in on the 5 minutes and see exactly how we could have scaled in on the lower time frames on the 5 minutes to catch this sell to lead us to this draw on liquidity, this 15 minute. Before we look at this buy right here, first we have to observe this sell right here that led to this buy right here, right? That we see that price tap inside of this 15 minute fair value gap. So this was our draw on liquidity. So we could have sold and then rebought all inside of our 8 a.m. to 12 p.m. session time. So now let's scale down to the 5 minutes to see exactly how we could have executed. And now we're on gold on the 5 minutes, right? We're just observing the same price action. So just like I stated, after price tap inside of a higher time frame key level, so this was our order block, this 15 minute order block, and then price give us a break of structure of this old low right here, right? We're just looking for price now to respect all the bearish PD arrays. So as you guys can see, price came back and respected this bearish order block right here. So we could have took a trade right here during our session time, stop loss at the high, right? Bring it all a little bit up. Stop loss at the high, and where we're targeting, right? We're just going to be targeting the open of that 15 minute fair value gap, right? Or the close of it too. That could be just a good target, or the 50%. But for me personally, I usually always target the open of that 15 minute fair value gap, because the fair value gaps are the magnets of the markets, right? Price will attract to these fair value gaps. So after price came back, right, from this break of structure and came back and give us a retracement to this order block, a RTO entry, price is just going to come back down. So we could have entered right here. We could have entered right here for our sell, right? And then for our buy model, right, we can even scale down even lower to the 1 minute. And now on the 1 minute, as you guys can see, price was just engineering all these old lows here, and then price purged through them, and then price gave us a break of structure here. So now on the 1 minute during our session time, right, we could have just caught us a quick buy reversal right here, where price is just gonna buy right here. We place our stop loss right at the old low, right here. And where we're targeting old highs, right? Possibly these old highs right here, this old wick high. Even though price played around, price still came in, purged right through it. So we had a sell to buy all inside of our session, right? Using higher time frame zones, right? So we use our higher time frame order block, and we use our higher time frame fair value gap, and then we scale down to the lower time frame inside of our session time to find these key setups. So I hope you guys go on your charts and backtest this and see this for yourself. If you guys have any questions, make sure to leave them in the comments. If you would like more in-depth and more personal help, make sure to check out the first link in the description for our Patreon for the Spektrades Hub, where we have the Mastery Hub, where you can live trade the New York session with us every single morning and access private mentorship lessons and exclusive access to me. So make sure you check out the first link in the description to join the Spektrades Mastery Hub. This is it. I hope you guys have a great day. Spektrades out.